Welcome to TalkTickers. We're here to give you the shortcut, the key insights from today's earnings calls.
That's right.
And today we are diving into Talen Energy's first quarter 2025 results.
Let's get into it.
So straight away, Talen reported what looks like a pretty solid first quarter.
Yeah, definitely solid. Adjusted EBITDA hit $200 million.
Okay.
And adjusted free cash flow was $87 million. That actually came in better than their own internal forecasts.
Interesting. So generating good cash.
Absolutely.
Yeah.
Shows things are running well, gives them a strong base.
Right. And it looks like they used some of that cash too. Yeah. Something like $83 million in share buybacks just in Q1.
Exactly. They're putting money back into their own stock, which, tells you something about what management thinks it's worth.
For sure. And looking forward, they've kind of tightened up the guidance for 2025, affirmed it, still positive, and 2026.
2026 outlook is holding steady. No changes there.
Okay. So let's dig a bit deeper then. What's driving this confidence? Because there are some, market uncertainties out there, like those tariffs on rare earth metals.
Right. There are headwinds. But Talen seems really focused on their path. It boils down to a few things. Run the plants well, sell the power, effectively commercialize those megawatts, return capital to shareholders, obviously, and then growth, mainly through that big AWS contract at Susquehanna, and looking at expanding to other sites too.
Gotcha. And they mentioned a key metric they use, free cash flow per megawatt. Why is that the yardstick for them?
Well, focusing on free cash flow per megawatt, it really emphasizes getting the most profit out of the power plants they already have.
Right.
Which makes a lot of sense when you think about how expensive and slow it is becoming to build new generation. Maximize what you've got.
Makes perfect sense. Get efficient. And their longer-term view on the whole independent power producer space, the IPP market, and, their spot in it, sounds like they're pretty optimistic.
Oh, yeah, quite bullish. They see power markets tightening up, and they see this massive wave of demand coming from data centers, especially in Pennsylvania.
Pennsylvania specifically.
Yeah, and check this out. PPL, the utility there, just announced plans for 11 gigawatts of advanced data center development.
Whoa, 11 gigawatts.
11. And that's right in the territory where Talen's plants are located. So huge potential demand right on their doorstep.
That's massive. Okay, so demand picture looks strong, potentially very strong. What about the supply side? You mentioned it's getting harder to build.
Exactly. Costs are up. Timelines are stretching out. For new combined cycle gas plants, CCGTs, you're looking at maybe $2,200 to $2,600 per kilowatt now.
Wow.
And even renewables are hitting bumps with supply chains and, like you said, those tariffs.
So building new power is getting tricky.
It is. And meanwhile, the big users, the hyperscalers running the cloud and AI, they're mostly sticking to their growth plans, some even speeding them up.
Okay, so demand rising, supply getting constrained. Sounds like a recipe for, higher prices eventually.
That's the thesis. Now, you do hear some skepticism about the IPP space sometimes. People point to data center, rebalancing is a term you hear, or maybe weakness in the forward power markets.
Right, the contracts for future power delivery.
Yeah. But Talen's management basically dismisses that as, temporary noise. They believe the underlying reality is tight power markets.
And Q1 kind of backs that up for them.
Seems like it. They pointed to strong load, good power prices, and their plants running well, both fossil and nuclear.
Speaking of running well, that AWS data center campus, the one at Susquehanna, that's actually live now.
It is. Electrified, delivering power, generating revenue.
Yeah.
First phase, basically. And they mentioned multiple buildings are under construction there, so that project is moving ahead.
That's a big milestone.
Definitely.
Yeah.
And another operational point at their Susquehanna nuclear plant, Unit 2, they had a refueling outage planned. They actually extended it a bit to do some extra maintenance.
Yeah.
So the non-nuclear side, the steam system, costs about $20 million.
Okay. Why do that?
The goal is to improve the steam flow and actually recover more megawatts, more power output than they originally planned from other upgrades. They think it'll pay for itself in about a year and a half.
Okay. So a bit more downtime now for better performance later. Strategic.
Exactly. And overall demand in their main grid region, PJM, seems strong too. They saw power deliveries up 3.5% adjusted for weather compared to last year.
Which means their fossil plants ran more.
Yep. Fossil fleet dispatch was up, helping meet that demand.
And what's driving that demand increase? Still AI and cloud.
Largely, yes. AI and cloud services are just eating up power. And remember, because of those challenges we talked about, there isn't much significant new generation expected to come online until, late in the decade.
Right, supply side constraints again. Okay, let's talk financials then. How did the plants actually perform during the quarter, especially when demand was high?
They performed really well. Very low rate of unexpected outages. The equivalent forced outage factor was just 1.2%. That's excellent.
That is low.
And because demand was up and they were available, their fossil fuel generation jumped by about 20% compared to Q1 last year.
Okay. I'm looking at the rest of 2025.
They expect earnings to be stronger in the second half. That's partly due to capacity payments kicking in, getting paid just for being available.
Right.
And also some reliability must-run impacts, where they get paid to run to keep the grid stable.
Oh.
So with that, they narrowed their guidance ranges. Adjusted EBITDA, now $975 million to $1.125 billion.
And free cash flow.
Adjusted free cash flow guidance is $450 million to $540 million. Still strong numbers.
And their balance sheet, how's the debt situation?
Looks pretty healthy. Net leverage, so debt relative to earnings, is below their target of 3.5 times. And they have good liquidity, about $970 million available.
Okay.
They also did some work managing interest rate risk, using swaps to fix the rate on some of their floating rate debt. Smart move in this environment.
Makes sense. What about hedging? How are they playing the power price market?
Their strategy there is really focused on protecting cash flows. So when forward prices moved up in Q1, they layered in some additional hedges for 2026 and 2027.
Locking in some prices further out.
Exactly. But they stressed it's pragmatic, not programmatic, meaning they react to opportunities. They don't just follow a rigid schedule. Flexible.
Gotcha. Okay, growth and commercial stuff. They mentioned the AWS deal, but any hints about other deals or new projects?
They were pretty tight-lipped on specific commercial activities, which isn't unusual. Said they're focused on finding the right solutions for customers and for Talen.
Right.
They did talk about exploring different ways to power data centers, especially mentioning front-of-the-meter solutions. It's kind of relevant after they had that setback with the interconnection agreement, the IFA, for the direct connection to AWS.
Ah, okay. So finding other ways to connect these big power users.
Seems like it. And they feel their existing assets, especially the infrastructure, already the Susquehanna site, give them a bit of a head start, a first mover advantage for data center power.
Trying to leverage what they have.
Right. And they even set a goal, kind of ambitious, saying they aim to announce their second data center power deal before competitors announce their first.
Putting a marker down there. Any talk about expanding existing plants?
No comment on expanding existing assets specifically.
Okay. What about the regulatory side? FARC, PJM, that always seems complicated.
It is. They're watching the FERC process closely. PJM has proposals for how to handle all this data center load, and Talen obviously wants a quick resolution that works for generators like them.
Understandable.
There's also still that legal challenge ongoing about the denial of the interconnection agreement, the ISA. That's in the Fifth Circuit Court, focused on FERC's reasoning.
Okay. And the PJM capacity auction, that's always a big deal for generators.
Yeah. The next one is coming up. They expect it to be constructive, meaning generally positive for existing generators. But there's always price variability.
Right.
And it ties back to what we said earlier. It's tough for new projects. The price limits in the auction, combined with high construction costs, make it hard for new builds to compete right now.
So existing plants have an advantage there too. What about demand response, using less power instead of building more?
It's seen as a potential piece of the puzzle. Yeah.
Yeah.
Especially for handling those peak demand periods, maybe 20, 40 hours a year.
Yeah.
But it needs more development within PJM to be a major solution yet.
Okay. Let's circle back quickly to that Susquehanna outage, the extended one. You said it was non-nuclear steam side work.
Correct. Specifically, the extraction steam system. The idea is to improve the steam flow, which boosts the turbine's energy output.
And they expect to get more power back than originally planned.
Yeah, they're aiming to recover more than the initial 27 megawatts they were targeting with other upgrades, and they expect the work to be done by mid-May.
Got it. Okay, capital allocation. We know they did buybacks in Q1. What's the priority for cash going forward?
Share repurchases are still the number one priority for excess cash.
Okay.
How fast they buy back depends on market opportunities and, how much free cash flow they're actually generating quarter to quarter.
And they've bought back a fair bit already.
Oh, yeah. Since the start of 2024, they've repurchased about 23% of their outstanding shares. That's significant.
Wow, almost a quarter of the company.
And they still have $1 billion authorized for buybacks to the end of 2026. So plenty more firepower there if they choose to use it.
Okay. One more asset question, Montour. Their coal plant. Any interesting comments there?
Yeah, they noted its run times have picked up quite a bit.
Meaning
It's needed more often. There's available energy demand in the system that it's helping meet. They see the need for a brand new additional generation as more of a longer term thing, maybe 2030, 2035 timeframe to meet that big expected demand growth.
so existing assets are key for now.
Very much so. They also touched on simple cycle gas turbines, smaller, quicker to build gas plants. They see those maybe filling a niche for data centers needing speed to market at a smaller scale, but maybe not the long-term answer for the really large power needs.
Right, not the baseload solution. Okay, so stepping back, looking at the big picture for investors.
Well, Talen's Q1 results were strong, beat expectations. It really highlights how favorable the current market is for reliable, dispatchable power generators like them.
And the data center demand, especially in that PPL zone, looks like a major growth runway.
Huge opportunity there. Plus, their hedging strategy seems designed to lock in some cash flow certainty near term, while still leaving some upside if power prices really take off long term.
And the buybacks show a clear commitment to returning capital.
Absolutely. But, navigating the regulatory stuff with FERC and PJM remains really critical for them to actually capture the full value of these data center opportunities. That's a key area to watch.
Okay, great summary. That brings us to our favorite part.
Yes.
This is not financial advice segment. Time for some outrageous but plausible trade ideas based on this call.
Let's brainstorm.
Okay, idea one. Talen affirmed their guidance. They expect higher earnings in the back half of 25 because of capacity pricing, and they have that massive $1 billion buyback authorization remaining. So what if you go long Talen Energy? The thinking is the market might still be underappreciating just how much those contracted capacity revenues will boost earnings, and those ongoing buybacks could provide really strong support for the share price.
Plausible. Playing the known factors and the buyback kicker.
Yeah,
I like it. Okay, my turn. Outrageous idea two.
go for it.
We keep talking about data centers needing power, right? And Talen is exploring these front-of-the-meter solutions, potentially using their gas plants. So how about a pairs trade? Go long Talen Energy because they have existing dispatchable assets ready to meet this need, and short, maybe a pure play renewable developer, one that's heavily reliant on financing brand new projects.
Okay, what's the thesis there?
The thesis is that dispatchable power from existing assets like Talen's becomes super valuable right now, while those new renewable projects might keep facing headwinds from high costs, supply chain issues, financing difficulties. It's a bet on existing reliable power winning out in the near to medium term.
Interesting. Playing the dispatchable versus new build theme. Also plausible, potentially outrageous depending on the specific companies. Okay, good stuff.
So, wrapping up on Talen.
Yeah, I mean, this first quarter really shows a company firing on most cylinders, right? They're capitalizing on strong market conditions.
Definitely.
And they seem very strategically focused on positioning themselves for this data center driven growth ahead.
Yeah, the management team sounds confident in their strategy, and they're being active with capital allocation, hedging, exploring growth. It certainly makes them a company to watch closely in the IPP space.
Absolutely. So as you think about everything we've discussed, please remember this is purely for informational purposes.
That's right, not financial advice in any way.
Always do your own deep research before making any investment decisions. Check out Talen's actual filings, keep an eye on the power markets and what's happening with data centers.
Couldn't agree more.